505 shares of SCHD. That's exactly how much I have in my Roth IRA right now. And in today's video, I'm going to be breaking down the numbers, the real dividend payment that I've received. We'll talk about the growth trajectory of the fund and why I think it's a pretty solid, stable portion of my investment portfolio, at least right now. And I got to be honest with you, this is for some reason an extremely controversial investment that people look at me and they either love what I'm doing or they call me absolutely crazy for having this as part of my portfolio. And to them, I got to say, to be honest, I don't really care. I'm going to invest in the way that keeps me investing. I'm going to get my money working for me. And if it's not something that you like with your particular investments, well, guess what? You don't have to do the same thing. So let's just jump right into it. So let's quickly talk about SCHD from a high level glance. A lot of people are upset with it right now because, well, in the short term, it hasn't been doing, super hot. If you look at the past year to date, it's only up 0.15%. Keep in mind, this is not factoring in the dividend payments that you receive if you are reinvesting back into SCHD. Now, if you look at the past year, it is down actually 2.37%. So you might be saying, hey, that's not really a great investment. What's going on here? Well, look at the past 5 years. It's up 50%. That's about 10% every single year. And if you notice that it trades sideways at some times in particular, you could see some solid growth here. You can see some solid growth at the very beginning. And then even if I go out to the max, you can tell this is up 230%. But again, at times you're seeing this kind of stagnant growth where it trades sideways. So we're in kind of one of those periods right now, and they have done some restructuring. Now, quickly, if you don't really know what's inside of SCHD, let's take a look at the top sectors that it has. We're looking at energy making up 20% of this, consumer defensive 18.43%, followed by healthcare at 15%. You've got some of the others mixed in there that a little bit lower of percentage, but I like to look at what these ETFs actually hold in terms of companies as their weighted averages. Now, AbbVie is one that has been absolutely killing it. If you look at my regular individual investment account, I also hold AbbVie shares individually in here. And you can see that AbbVie over the past year alone is up 23%. And even my investments in this account are up close to 70%. AbbVie has been an absolute gem for my portfolio. Now, again, that's not the point of this video. Let me go back to the Roth IRA here. Let's go into SCHD and check out more of their holdings. Now, they've got ConocoPhillips, they've got Chevron, Lockheed, Home Depot, Verizon, and all of these are very solid dividend paying companies. Again, that's what they mainly focus on. And if you didn't know, there's actually criteria for your company to be held inside of SCHD. So it needs to have a market cap of at least $500 million. There needs to be 10 years of consecutive dividend payments, and it must trade at least $2 million in daily average volume over the past 3 months. In other words, this fund is relatively safe, and as you can tell from the chart, it's pretty stable and consistent. Now, I know I mentioned this before, but I've been investing at least $15 every single day into SCHD, trying to maximize how much I'm getting in. And same with VTI. Now with SCHD, you can see I've got $13,922 invested. Clicking into it, let's look at the results though. Even though it's been trading relatively flat over the past year, I'm still up 9.38%, $1,193. My average cost is $25.18. Now keep in mind, SCHD today costs $27.54. This makes up currently 43% of this Roth IRA. And if I scroll down, let's talk about the dividend payments that I have been receiving. Now, the most recent one, what's really interesting about this is it's $129.58. Oh wait, the ETF price, $27.54. I'm getting 4 free shares every single time that I'm paid a dividend, and I'm just reinvesting it back into SCHD. And guess what? That makes the next dividend payment even higher. I get more free shares and I keep reinvesting and so on and so forth. Now, we'll talk about what that could potentially look like here in the future. But before we do that, let's take a quick look at just what the dividend payments have trended like over time. You see, the first one that I ever received in this Robinhood account, I had previously hosted this Roth IRA in a different brokerage and I transferred it in. That's why it started at $58.66. I think the first time I ever received payment, it was like just a couple dollars. So this has been trending up and up, and there's no stop in sight. So first one, $58, then $89, $91, $102, $104, $119, and now yesterday, $130. This is the snowball at work, and this is going to keep growing over time. And you can see that next to these payments, you've got this little reinvested thing here. I'm literally just taking the money that this pays me and I'm reinvesting it into SCHD, and it's going to grow so much quicker. Oh yeah, and the best part to this is that this is just one small percentage of my overall investments that I'm making. So again, if I go back into my investing portfolio, and I talked about AbbVie before, well, guess what? AbbVie does the same sort of thing where they're paying dividends. And with AbbVie alone, the last payment I received was roughly $22. So you start compounding all of these other dividend investments on top of this too, and we got a pretty cool looking portfolio that's building wealth for the future. Now, let me show you the craziest part to all of this, what this could actually become in the future. Now, this isn't guaranteed, and obviously I'm going to be making a lot of assumptions here, but as you can see on the screen, we're investing in SCHD. And I'm going to have reinvestment on because that's what I was talking about before. Now I have 550 shares at $27.54. The annual contribution that I'm making is $3,500 because, well, for me, I use about half of my Roth IRA payments that I can make. $7,000 is the annual limit. So I'm going to take half of that, put it into something like SCHD. Now, the initial dividend yield is about 3.8%. That's what it is today. And the expected annual dividend amount increase per year. Well, this is really interesting because if you see, oh my gosh, look at these annual payout growths that we're seeing over the past 10 years. Now, on average, this is somewhere right around 10%. So I'm going to go ahead and update this number to about 10%. And then you can do the expected annual share price appreciation per year. Now, if I go to just the summary on this, and we're looking at the growth over the past 10 years, you can see on average, it's about 11.7%. Now, weirdly enough, this factors in dividend payments that are being made, so it looks a little bit skewed. So we'll drop this to about, 9%. And I've got 30 years till I hit, retirement age. So let's go ahead and calculate the dividends here and see what this could potentially look like in the future. And I got to say, this is insane. Looking at an ending balance of $1.8 million, a total return of over 1,400%, an annual average return of 9.45%, again, on pace with what we're seeing with SCHD. And then annual dividend income all the way at $91,000. I could literally retire off of this one particular fund, and it is just absolutely mind-blowing to see. Now you can look at, oh gosh, an ad here, but you can look at, if you scroll down, what those payments kind of look like. Starting out annually at $583 in dividend payments and going all the way down. You have the payment calculator and schedule that you're going to see for the next 30 years. And man, this is a cool tool. It's at MarketBeat. So I'll have the link to this in the description, but just know that a lot of investing is just sticking with it and compounding and looking at different scenarios like this and growing your accounts. Now, I can already hear the comments ringing, and just trust me on this. You have to take these numbers with a grain of salt. Not every situation is going to be perfect. We don't know what inflation is going to look like. We don't know if they're going to consistently increase those dividends by 10% annually. We don't know if history is going to repeat itself on the return that you're going to get, but people will tell you to just look at the numbers and chart forward as they kind of have historically proven. That's about the best we can do for some of that stuff. So if you're overly bullish in certain situations, I feel like that is okay, especially if it gets you investing in a safer way and you're feeling confident about what your returns are going to potentially be in the future, then that's all that really matters. Again, when it comes to investing, it's got to be what you are comfortable with personally. And, you don't need to do anything other than block out the rest of the noise. Now, if you're watching this video, interestingly enough, you've caught me at a great time. I'm kind of restructuring, rebalancing my portfolio. If I haven't already released the video here, I will link it here in the future, but there's a great one coming out. Make sure you're subscribed, stay tuned for that. And hope you guys enjoyed this video. If you have any comments, questions, leave them down below. Thank you for checking out the video, and have a great day.